Alrighty, let's go ahead and get started. Good morning and welcome to Maynard Costerason's Fraud Prevention Through Strong Financial Controls webinar. We're so glad that you're here. Today, we will be sharing how to close gaps without slowing down operations with real-world examples, red flags to be on the lookout for, and a simple checklist you can apply immediately to strengthen your internal control environment. Thank you for joining us today. A few housekeeping items. This session is being recorded and everyone is muted. If you have any questions, please type them in the chat and we'll have time at the end to answer those. And with that out of the way, I would like to welcome Bethany Verble to today's session. Bethany is a senior manager in the consulting division of Maynard's Accounting and Outsource Department, and she regularly presents on fraud prevention and internal controls to organizations across Michigan. Her passion helps clients prevent loss and mitigate risk in the future. Thank you for taking the time to share your knowledge today. Bethany, I will turn it over to you.
Awesome. Thank you so much, Cheyenne. So as Cheyenne said, I'm Bethany Verble, and today we are going to be celebrating International Fraud Awareness Week. Hooray. So if you didn't know, the Association of Certified Fraud Examiners, ACFE, they do an International Fraud Week every single year. I think this is actually the 25th anniversary. So we love to do some additional content and webinars about fraud prevention. It's always a great topic to really delve into. I always like to think about it, we're coming up on year end. We're going to start setting some of those goals for 2026. And maybe one of the things that we want to have front of mind for our organization as we enter a new year, which is insane, is, how can we strengthen some of our internal controls? And I love that Cheyenne said this in her introduction. So my role at Maynard, I am a recovering financial statement auditor. So I worked in the audit department the first 7 or 8 years of my career here, and then transitioned over into consulting. And my focus is on risk management. So not only internal controls, but also there's a huge risk of inefficiency, right? I often say with internal controls, if you have 5 people review something, those are some great controls, and nothing is ever going to get done. So a lot of the focus of this presentation is going to be, yes, we have to have great internal controls, but how can we do that without slowing ourselves down? Because all that's going to happen then is that people are going to do their level best to circumvent those internal controls because they're just a nuisance. So we'll go through some internal control best practices. We have lots of great stuff coming. As Cheyenne said, if you do have questions throughout, I love for webinars as much as possible to be interactive. So if you have questions, drop them in the chat. Cheyenne has my blessing to interrupt me as she sees fit. So we'll make sure we address any questions that come up as we go. So we're going to start out by defining what are internal controls. What the heck are we talking about? Then we're going to talk about why are these important? I often refer to this as the scared straight portion of the presentation. So I like to do this towards the beginning because, as soon as you show people some of the facts and figures about the impact of fraud, then the next couple of sections they're more engaged in. So then we'll talk about some internal control best practices. We'll talk about technology too. And then, if there's any questions that we haven't addressed throughout the presentation, then we will absolutely do our best to leave some time for Q&A. All right, so what are internal controls? What are we even talking about here? So internal controls are really designed to be safeguards. The goal of them is to help create an effective fraud prevention system. And what I always like to remind people of, no organization is fraud proof. That is not, it's not a thing. Fraudsters are creative and they're smart. And it seems like they're always just that one little half step ahead of us. So no organization is ever going to be fraud proof. But internal controls are designed to help us create a system of fraud prevention. So in my role at Maynard, I work on a risk management side of things, and that's more of what we're talking about today. That's the fun conversation. It's brainstorming. It's okay, well, we only have this many people in the finance office. So how can we have good internal controls? What could be the review process? Maybe we need to bring in one of our board members. Those are the fun conversations. Those are the prevention conversations. The other side of what I do is the detection conversations. And that's, we think fraud has happened or we know it has, and we want to figure out how much. Those conversations, not as fun, right? It's not a brainstorming. It's a, oh my gosh, how did this happen to us? What should I have done? What could I have done? A lot of times it's someone that, an organization, they've been there for 20 years. You watch their kids grow up. There's a lot of, emotion that surrounds those detection conversations. So we want to focus on prevention so we don't have to have those detection conversations. Internal controls are a great way for us to protect not only our monetary resources, right? So we're protecting the money of our organization, but we're also protecting human resources. A lot of times, if an organization, maybe internal controls isn't a big part of a conversation, or we're going through and redesigning some of our internal controls, the pushback that we often hear is, well, I thought you trusted me. And absolutely, right? We trust our team members, we trust our employees. So, internal controls, it's not saying I don't trust you. It's saying I want to have things in place so that if money goes missing or if something goes wrong, something happens, I don't immediately have to go, well, you were the only person that had access. You were the only person who was aware of this transaction. Because when I have to do that, then I have to assume that it was you. So internal controls is not a trust thing. It is a way for us to protect people. And a lot of times if that is the way that we are presenting internal controls, I'm not trying to be your boss. I'm not trying to, make it impossible for you to do your job. I'm just trying to protect you and the organization. Sometimes that can help kind of turn that conversation on internal controls. And some of the things that we associate with internal controls or ways that we can, implement that effective fraud prevention system. Separation of duties, we'll talk more about all of these things, but documentation requirements, the saying in the audit world, and it's true, if it isn't documented, it isn't done. So making sure that we have some of those things in place, review processes, which are all part of separation of duties. So that's really what internal controls are. It's a way for us to protect our organization, protect our team members, and really create this system where we're focused on prevention so that we don't have to have those detection conversations. So why are these important? Why did I decide to take an entire hour out of my day to have somebody talk at me about internal controls? So why are these important? So I have a couple of slides on here from the Association of Certified Fraud Examiners, ACFE. So they, every other year, do what's called a report to the nations. And they will survey certified fraud examiners like myself throughout the nation, or throughout the world, actually. So this is a compilation of about 2,000 cases worth of data. And I like to emphasize every time I pull this data up, this is known cases. These are cases that have been uncovered. There is fraud out there that's happening that we don't know about yet. And there is fraud out there that unfortunately we're never going to know about. We're never going to discover it. So don't think that this data is a complete picture because there's fraud we don't know about yet. So, but I like this slide and this information because I think it gives us an idea of what the landscape is. So this is a breakdown of the different types of organizations that are being victimized by fraud. And I know we have a wide array of industries on here. So, private companies, public company, like this is hitting the gambit. And again, this is the fraud that we know about. The ACFE actually estimates that 5% of an organization's revenue is lost to fraud every single year. And it's not always these cases where there's this median loss of $120,000. Sometimes it's the time theft. It's the, well, I need $20 for my kid's lunch. I'm just going to grab it from the till and I'll put it back tomorrow, except then I forget about it. So it's not always this giant fraud case. It's not always we're in the news. Sometimes it truly is those small bits of fraud that are happening. And that's where it's important for us to really focus on building that comprehensive system of effective internal controls. So this is to kind of just give you a picture of who's being victimized and what is that median loss that they're seeing. Now, this slide I like because I think it really, really emphasizes why are internal controls important. So this breaks down what, to our knowledge, right? There's always going to be things we don't know, but what in an organization led to fraud happening? And the top reason, that top reason there is a lack of internal controls. And then the next one is an override of existing controls, right? So basically, the top 50% of why fraud cases happening has something to do with internal controls. Either we just didn't have them or they weren't effective. So maybe we had them, but they weren't great internal controls. Or maybe we had them, but this poor tone at the top really led to there being some override. And I just want to take a brief pause to kind of talk about that tone at the top, because I think this is one of the most underrated internal controls that an organization can have. And it is probably the most important aspect of that effective internal control system is tone at the top. And it is exactly what it sounds like. It is, what does our president, our CEO, how do they act about internal controls? Do they complain that they have to provide receipts for everything for a reimbursement? Or are they the people that finance has to go chasing around to try and get their credit card receipts? Or are they the ones that say, hey, I know it's an extra 30 seconds for you to take a picture of this credit card receipt, but it's really important for our finance department and for us as an organization to have that information. So when we have a good tone at the top, leadership is telling everyone, hey, this is important and here's why. When we have a bad tone at the top, then we're basically telling our team members, we don't really care, right? We don't really care about fraud prevention. If you take a 20 here and there, like we don't really care about that. That is what tone at the top is either going to help us with or seriously hurt us with. Um, so this all kind of works together, right? In the internal controls. But those fraud cases that we saw, that almost 2,000 fraud cases in the most recent report to the nations, the vast majority of them, it really came down to internal controls. So let's talk about the fraud triangle. We cannot have an International Fraud Week presentation and not talk about the fraud triangle. So if this is the first time you've heard about it or the 500th time, it's always worth talking about and reminding ourselves of. Because anytime we have a fraud happen, we're going to have these three elements. And I would love to claim that I developed this. I didn't. Donald Cressy in the 70s kind of was doing some research as they started to put together the Association of Certified Fraud Examiners and came up with this triangle. So the first element that we're going to see in any fraud, every fraud, is pressure. This is called different things. You might also hear it referred to as perceived unshareable financial need. It's pressure, right? This is some sort of financial pressure that someone is feeling, typically that they feel like they can't share. So it could be that they are going through a difficult divorce. They might be having a gambling addiction, but there is something happening in their life such that all of a sudden their paycheck, the money that's coming in, is not able to match their lifestyle, is not able to match what is happening in their life. So we start with pressure. And oftentimes, that's it. It stops with pressure. They're feeling that. They may or may not feel like they can share it, but it's not going to go any further. Then we come to opportunity. And this is where internal controls are key. This internal controls is where we can break the opportunity leg, because opportunity is exactly what it sounds like. We have processes and procedures in place such that if someone wanted to commit fraud, they could. So maybe we don't require everyone to submit credit card receipts. Or maybe we require it, but we require it. So we're going to like ask them once if they didn't turn them all in, and then we're just going to kind of move on with our lives. Maybe we don't require documentation for expense reimbursements. Maybe, we have one person that handles the whole aspect of an accounts payable transaction. Maybe we don't have great internal controls set up in our accounting software. So if someone unauthorized wanted to print a check, they could. Those are all instances of opportunity. And again, this is oftentimes where it stops. They have the pressure, They see the opportunity, but they just can't quite do it. They can't quite hit that last leg of the triangle. And the last leg of the triangle is rationalization. This tends to be the most difficult one when we're going through a fraud case to really kind of figure out, because when it comes to rationalization, basically someone has to be able to say to themselves, okay, what I'm doing is not wrong. It is X. So there are endless, endless ways that somebody could rationalize what they're doing. This was a number of years ago, but there was a case we were involved in, and it was a pretty easy investigation because someone had a list of everything that they had taken, and it was in their desk drawer. Because in their mind, they were not committing fraud. They had some pressure, there was opportunity, and they just needed a loan. They just needed to borrow a little bit of money to get some things settled in their life, and then they were going to pay it all back. So that person kept track of every single dollar that they took. And in their mind, they were going to pay everything back. So it wasn't fraud, it was an interest-free loan that nobody else knew about or approved. Still fraud, but that's certainly one way that we can rationalize. Sometimes we see, you know, I say this knowing full well for all of our clients, the ask of our finance team members, it's not getting any smaller, right? And our finance teams typically aren't getting much bigger. So we are asking people to do more and more with less and less. So one of the rationalizations that we often see is, okay, well, I'm essentially doing the work of two people. They're not paying me for the work of two people. So I'm owed this. I basically am just going to supplement my salary with what I'm actually owed, because they're certainly not paying me to do the work of those two people. So rationalization again tends to be the one that's probably most difficult to really nail down, but you have to have all three. You have to have that pressure, you have to have that opportunity, and somebody has to be able to say to themselves, I'm not committing fraud. I'm doing this. And this is where internal controls, again, are super, super important. So internal controls, we can't always help with the pressure, right? That's happening in someone's life. It's absolutely vital when it comes to opportunity, because if we have good internal controls in place, we're going to make opportunity really, really hard. Never impossible. Keep that in mind, right? No one's fraud proof, but we're going to make it pretty darn hard. Internal controls can help with that rationalization though too. Because one of the things that we hear when it comes to rationalization is, well, the organization didn't require support, or they did, but no one actually looked at it, or well, they required it for employees, but the CEO, the CFO, they didn't have to turn things in. So when it comes to that tone at the top, and creating this environment of strong internal controls, that can help with rationalization too, because it's really difficult for someone to be able to rationalize and say, well, they don't care about protecting this organization. They don't care if I take a little bit off the top here. When we have internal controls, when we have a good tone at the top, when we as an organization have a culture of fraud prevention. So internal controls are absolutely vital, to really cutting down our fraud risk at our organization. Cheyenne, I'll pause here. Any questions come up in the chat just yet?
Not yet, but the chat and the Q&A is open for anyone
All
that
right,
has a question.
perfect. Thank you. All right. So hopefully I have convinced you that internal controls are your new best friend, and you simply must have them. And many of you are like, well, yeah, I have internal controls, Bethany. But let's talk through some of the best practices. Even if we have great internal controls, some of you are probably sitting there thinking, well, my auditors never say anything about my control, all of those things. But when's the last time we really sat down and thought about them and looked at them and thought, okay, these are here, but like, are they the best that they could be? So let's talk through some internal control best practices. And probably my top five, if you can have top five internal controls, is reconciliation. And when I say that, everyone tends to go, well, yeah, I do bank recs, Bethany. But it's not just bank reconciliations. Um, Anytime we have two or more sets of data, we got to figure out where do they match and where don't they. So a great example might be if we're a nonprofit, our donor database, or where we're storing donor information. Typically, that also includes all the gifts that they're giving us, right? So, do we ever reconcile our general ledger and our donor system? If not, what are we missing? Um, Maybe something is getting entered in the general ledger, but it's not making it over into the donor database, or vice versa. And if it's vice versa, where something's getting entered into the donor database, but not the general ledger, well, our donors are expecting a year-end statement, right? So we want to make sure that our donor database is correct. But maybe the money that they donated just happened to not get deposited into the organization's bank account, but it sure as heck got deposited into mine personally. Maybe I washed the check and I deposited it into my account. If we're doing a reconciliation, we'd be able to see that, right? Reconciling inventory systems if they're separate from our general ledger. Anytime we have separate sets of data, financial data, it is incredibly important to reconcile those. Now, I said it's not just bank reconciliations, but let's not forget about our bank reconciliations. Those are one of the most effective internal control processes that you can have in place, is reconciling our general ledger and our bank balance. What's in the general ledger that we're not seeing here, and vice versa, right? This is incredibly important. It's also important on all of these reconciliations, and we'll talk through some of this a little bit more later. When we're talking separation of duties, so we're doing a bank rec. That's awesome. I love that. Who's looking at it? Because if one person is doing the reconciliation, then if there was money missing from the bank account, but I entered it into the general ledger, then maybe that made it into my pocket, and maybe there's a difference in our bank reconciliation. But if no one's looking at it, then I can hide that pretty easily. Or maybe we're doing our bank reconciliations in Excel instead of our general ledger system. Well, I can manipulate Excel pretty easily, right? So bank reconciliations are incredibly important. We always recommend doing them in your accounting system, but it's equally important to have that review process over them. So we're really separating duties. And reconciliations, yes, they are absolutely going to help us with our internal controls, but it's not just that, right? It's also going to help us in financial reporting. Some of the things with internal controls is it's not just fraud prevention, it's are we putting out accurate financial data? If there are things that are missing, one of the best ways that we're going to be able to find that, even if it wasn't, fraud, it was just human error. Hey, I missed something. We're going to be able to find that as we're reconciling. And, reformed auditor here, I got to tell you, they're going to ask about it, right? So if we're doing it throughout the year, again, not only are we helping ourselves with our reporting and our internal controls, but we're just going to make that audit process that much easier. It's so important it required 2 slides. So I included in here because a lot of times organizations say, well, we do our bank recs, but like we're not doing them timely. Like, maybe we do 3 or 4 months all at a time. And, the question's always, okay, well, why? So what are some pain points that come along with reconciliations? And what are some ways that we could maybe help with that? So one of the pain points is just getting it in the right place the first time around. Because if it's not in the right place at the first, then we have to start doing some hunting and pecking, right? No one wants to do that. So this is an opportunity for us to look at the other part of my role is looking at efficiency. So where can we reduce that manual data entry? Could we use a bank feed where our bank connects with our general ledger so that anytime activity is happening over here in the bank, it's getting into the general ledger? We're still going to have some work to do, right? We still got to look through things, make sure they're in, all in there, but it's greatly going to reduce the manual data entry, which is when that human error kicks in. And maybe our accounting software, depending on the industry that you're in, maybe it doesn't talk to our bank. Well, that's okay. I mean, it's ideal. Ask your software provider about it. But if it's not possible, well, where could we export data from the bank, maybe import it into our accounting software to really help us get it in the right place the first time around? Um, Reconciling items, the bane of our existence, right? It's those lingering things that just kind of hang out on the bank reconciliation. And I always like to remind people, just because your bank reconciliation says zero at the end doesn't actually mean it's reconciled. There might be some of these reconciling items that are just haunting us. So this is where it can be super, super helpful. Again, set up those bank feeds, right? Or do some importing. But make sure that we're reconciling within our accounting software whenever possible. I see a lot of organizations that it's done in Excel, and maybe they don't like the bank reconciliation module within their software. For a few of our education clients, the software that they're on, it doesn't have a bank reconciliation module. That is incredibly rare. So if I ever get that response from you, I'm going to ask about it. I'm going to ask you to show me. But reconcile within our software. Make your software work for you. And if it isn't working for you, then let's figure out why, right? Don't create this workaround over here in Excel that is really, really easy to manipulate, or like someone accidentally deletes it and then we have to talk to IT to try and restore all the things, right? So make sure that we're reconciling within our accounting software. That is going to be the most effective way for us to truly make a bank reconciliation or any type of reconciliation the most effective for internal controls. The other pain that I see, and this is, I think, I see it the most in governmental entities, municipal clients, but it's anyone, is assigning responsibility. Who is responsible for doing it and who reviews it? And I'm going to tell you, I'm honestly not too picky on who's doing it and who's reviewing it, but they have to be different people. So depending on the size of your organization or your workload, this is something, consider outsourcing it, right? Have somebody else do the bank reconciliation and you can review it. Whether that's our team, another finance team that you work with, you know, have those very delineated responsibilities. And when it comes to the review process, again, it's not just a, yep, I see that it's done. We want to make sure someone is actually reviewing the reconciliation and is actually trying to understand what's happening out there. So that's where sometimes maybe we do the reconciliation internally, but maybe we ask a board member to review it. Maybe we use some of those resources to have someone who is truly going to delve in and try and get a good understanding of what is happening in that reconciliation. And that's really important to have it, again, be a true and effective internal control. All right, we've belabored the point on reconciliation. So let's talk through some disbursement and vendor controls. So we got to have approval, right? We're not just sending payments out willy-nilly. But what I see a lot of organizations do is they have a one size fits all on approval. So it doesn't matter if the transaction is $20 or if it's $20,000. The same review process applies and it requires multiple people. Well, do we really need that? Probably not. So what is our risk appetite? We can look at our organization and say, okay, well, if $20 goes out the door, it's not going to cause the downfall of the organization. So maybe that only needs one person reviewing it. And maybe it could be a supervisor. It doesn't have to be the CFO. But maybe if something is $200,000, well, maybe I want a department head and the CFO and maybe a board member, so really determining what our risk appetite is, which is going to be different for every type of organization, and then implementing those dollar thresholds and making sure that it's part of our policy that we'll talk about, documenting what those thresholds are. Look at our payment methods. I said earlier, I mentioned something about washing checks. We are seeing a significantly increased amount of check fraud over the last couple of years. So are we paying everything via check? And are we getting a whole bunch of calls from vendors saying, hey, I didn't get paid, and then we're voiding, reissuing, having to worry about stop payments? So look at our payment methods. Electronic payments can be very secure. So when it comes to approval, can we set it up with our financial institution where one person enters the payment and another person has to approve it before it will go out? Well, that's a better control than requiring a signature on a check, right? The payment literally can't be initiated until someone has approved it. So, look at our payment methods. The next couple are, trying to harness technology to make it work for us. If we are paying via check, but ACH too, are we using positive pay? Um, for those of you that maybe don't have experience with it, you basically have to upload to the bank. Here is the check number, if they're checks, the vendor, the amount. Different banks require different information. You're going to upload that to them, and they are not going to cash a check or initiate a payment if it's not on there. They're going to contact you and say, hey, somebody is trying to cash this check number. It wasn't in your register. Do you want us to cash it or no? Um, some of them have expanded that to include the vendor. So if someone, changed the vendor from a legitimate vendor that you work with to maybe themselves personally, then the bank is going to call you and say, hey, this vendor doesn't match. What's up here? Positive pay is a great control. Look at AP automation, and we'll talk about this in documentation too. There are lots of different systems that will allow you to kind of automate your accounts payable. And part of that includes workflows. So those dollar thresholds that we talked about, you can set those up in that system, and someone is going to get notification to approve it in that system. So there's no, oh, well, I forgot what the policy was. There's no, oh, well, it needed to get paid, so I just pushed it through. We can make it very, very definitive in those types of systems. And again, separation of duty. I don't want the same person that is entering information into the general ledger and then printing the check, approving and signing the check, right? So we have to make sure that we have a separation of duty between who's doing it and who's approving it. Documentation. I got to have it for every purchase, right? I know some organizations are like, well, if it's below $20, best practice is always going to be to have documentation for every transaction. I know sometimes it's a pain. That's oftentimes why we recommend that accounts payable or credit card automation to try and help cut down on some of that. With AP automation, credit card automation, a lot of those systems will help facilitate some of that. So instead of somebody coming in with their credit card statement and 20 receipts and one of them that they spilled coffee on because it was in their car and just dropping it on finance's desk, well, maybe we've set up a system and they take a picture of their credit card receipts and upload it into the credit card system. So we're not chasing them around. There's automated notifications that say, hey, remember that receipt? Got to attach it. So that's a great way to facilitate having documentation. Use your systems, right? Documentation, it doesn't just mean pieces of paper. Sometimes it does. But most accounting systems now will let you upload things. Some even have approval workflows in the system. So use your system. We're paying for our general ledger system. Make it work for you. And again, we want to see support and approval for all transactions. And we want to make sure that that's documented. And that again is where that AP and credit card automation system can be really, really helpful. It's pretty easy to lose a piece of paper, right? It gets shoved into someone's desk drawer and they forget about it. And then those pesky auditors come and they're asking for support. We don't know where it went. Well, if it's in our system, then we know that it's there, right? It's documented, the approval is documented, and again, we're making our system work for us. Policy. So we want to make sure that the approval requirements, the documentation requirements are all documented in a policy, because that's going to be something that we can always go back to, is you have to have a policy for things because that's how we help hold people accountable. This should include if you have any sort of federal funds, make sure that you have the federal procurement requirements in there. Super, super important. If we have credit cards at our organization, we got to have a credit card policy. Um, it should break down what are the requirements. What are the documentation requirements? If you continue to choose not to provide me documentation, what are the consequences of that? So really lay that out for people. And the last thing on here is dual signatures on checks. Is it effective? So, in the most accountancy way possible, it depends. Because I think a lot of organizations have this as a control and they're like, well, I require two signatures, so I'm good. No, um, there's nothing inherently wrong with requiring multiple signatures on checks. It's not a bad policy by any means. But the bank, when they're cashing those checks, they don't know your policy. They don't really care what your policy is. So if we are saying, well, we require two signatures on checks, and that's how we know that it's been approved by multiple people, don't let that be the end all be all to protect yourselves. That's really where the AP automation system, having those policies on, approval and those sorts of requirements, that's what's going to protect us. So you can require dual signatures on checks, but don't let it be the end all be all. When we're looking at vendor onboarding, we should have an onboarding process for our vendors. It shouldn't just be someone went out and purchased something and they drop the information on our desk and we have to enter a new vendor. We need to get the required documentation, W-9s, insurance policies, whatever the case may be. We want to get that at the start of the relationship because come 1099 season, which we are quickly approaching, I don't want to have to go and chase a whole bunch of vendors down to try and get that information, right? So we want to get that ahead of time. Absolutely best practice to have some sort of approval workflow. So one person should not be able to just add a vendor willy-nilly to our general ledger system. We want to make sure that, again, one person is initiating, but then someone else is looking at it and saying, okay, well, I don't see the W-9 here, or, well, this looks like a duplicate vendor. Why are we adding them a second time? Because that's a easy fraud technique, right? Set up an LLC under a vendor name that's similar to one vendor we already work with. And if no one's paying attention, and I don't know about you, but if I'm looking at checks, I'm maybe not looking to see if you changed a couple of letters in the vendor name, then that's a great opportunity for someone to be able to divert some payments over to them. But if we have an approval workflow, then we reduce our risk there. And we should have a conflict of interest policy. Um, Different organization types will have different types of conflict of interest policies, but this is always something good to have when we're looking at onboarding vendors. What relationships might we already have with this vendor or the people that are at the vendor? And then also vendor maintenance. So monitor changes in vendor contact information. Mark people as inactive as needed. And this one, be very, very vigilant and cautious when information or contacts change. This is probably one of the most rampant fraud schemes that we're seeing right now is a vendor's email gets hacked and they email us and say, hey, can you please change the routing and bank account information for our payments to this? And we say, yep, it looks like this came from the appropriate vendor email, and that's my contact. So, yep, I'll go into the system and change it. Meanwhile, a fraudster just got all of the payments to this vendor diverted over to their bank account. So this is where it's a great opportunity for us to pick up the phone and maybe make a phone call and say, hey, vendor, did you ask to have your information changed? And if they did, then they're going to say, I did. Thanks for checking. If they didn't, they're going to say, no, what are you talking about? So vendor maintenance and being really, really cautious about how we are changing information is incredibly, incredibly important in this kind of fraud landscape. I'm going to take a brief pause. Do we have any questions that have come in?
Yes, there is one. There's two actually. What is the best practice to verify that the bank information provided by the vendor is for the vendor and not an EE's personal account?
That's a great question. Um, there's no perfect method, right? That's where, again, it's really, really important to call our vendor. Make sure, and that's where, the fraudsters have gotten even more sophisticated. Don't call the number that's in the email signature, because they might have like a Google phone number that is going to divert you. So go to the website, or if you have the information saved in your Outlook or something, and call that person directly to make sure that it's the correct information. This is another place where sometimes that AP automation can be helpful. Is basically having our vendors have a little bit more control over their own information getting entered. So that can be another method to help verify that the information is correct, and the vendor is more responsible for keeping it updated. You can absolutely do comparisons across, payroll information with vendor payment information. That's kind of some data analytics that you can do to make sure that there isn't any crossover. So if you have any concerns or suspicions, or just want to kind of do a double check, that's another option as well.
Awesome, thank you. The second question is, the receipt upload sounds great, but I find that a lot of employees with purchasing cards do not even submit a valid receipt, and I still have to reach out to them. How do I handle this aside from asking the employee to reach out to the vendor for a valid receipt?
Uh, well, um, sometimes when I'm writing recommendations, I phrase it as, if someone is a repeat offender in not being able to provide receipts, then we might need to reassess if they actually need a credit card to do their job. Because if not, and you have proven to me that you can't provide me receipts, that credit card might need to be removed from that person's possession. So that is certainly an option. And coming back to the credit card policy, that is something we should include in there. Is, hey, you have to provide me documentation. And if you don't, after, this period of time, then guess what? You no longer have a credit card, and you have to purchase things personally, and you'll get reimbursed for it. I will say, with a lot of the credit card systems currently, like the automation systems, it will send someone like continual notifications, not continual, but like they're going to get daily notifications that they have to provide a receipt. Now, I will say, and in those systems, and even if we're doing it manually, for my non-repeat offenders, sometimes life happens, right? The machine ran out of tape, or the machine wasn't working. So there are absolutely reasons why someone maybe doesn't have a credit card receipt. Then we need them to fill out a missing credit card receipt form, whether that's manual or in an automation system. And it basically details out, hey, here's why I don't have a receipt. This was the purchase, this was the purpose, all of that kind of relevant information. That's also a great way for us to track that if someone starts to have a habit of that, then we can monitor that, because that's what they're submitting, is a whole bunch of missing receipt forms. And again, if all else fails, then that individual probably no longer needs a credit card. Anything else, Cheyenne?
Nope, that's it. Thanks, Bethany.
Let's talk a little bit about some payroll controls and considerations. So anytime we have hourly staff members, we want to have time cards. I'm not advocating that you got to have paper time cards, right? It can be in your payroll system. I would highly recommend it be in your payroll system. But we want to make sure that supervisors are approving those time cards. And ideally, it should be someone who truly understands whether or not that individual was there, that, they truly are supervising that person. So time cards are important both on the approval side of things, but on the documentation side of things. We got to have them, and we got to make sure they're approved. Same thing with pay registers. And again, I'm not saying you gotta print all this out, right? Not saying that. It can be done electronically. A lot of payroll systems will allow you to do approval in the system. But I want to make sure that somebody is looking at the pay register after it has been prepared by the preparer, right? One person does it, one person reviews it. So that way we can see, well, hey, why does somebody have like 120 hours for a 2 week pay period and they weren't authorized for overtime? Or why did this person get a $5,000 raise? So if we have that approval process, we're again coming back to breaking down some of that opportunity there. We should have approval and documentation for any changes in pay rates. Again, it comes back to I want to make sure that there is someone who's actually reviewing that so that I don't decide that I worked really hard this week, so I deserve an increase in my pay. Not only should we require documentation for that, but there should be some sort of approval required, whether that's in our payroll system or in another workflow that we've set up. There should be, at least some sort of approval or review over other payroll reports, filings, and tax returns. Again, human error is a thing, but if someone was trying to conceal something, they would have to conceal it on here too. Part of this too is making sure that these things are actually happening and are happening timely. We never want to, get to the end of a year and realize that, these haven't been happening timely and we've been incurring all of these fees. But if we have an approval process over these things, then we're going to catch that much sooner and we're going to be able to rectify that a lot sooner. So incredibly important on the payroll side of things, both documentation and approval, just across the board on payroll. We also want to make sure we have good policies around payroll. We should have a hiring policy, right? Um, you know, when we come back to looking at conflict of interest, what sort of requirements do we have if someone has a family member that works here? Do they have to remove themselves from the hiring process? Um, Document what that hiring process is going to look at or going to look like. And this is a great opportunity to work with like an outsourced HR firm if you don't have HR in-house to really get a robust policy set up for this. We should have a policy around payment methods. Most people are on direct deposit, but I got to tell you, I still see some lingering check payments. Having a policy that says, hey, we only pay via ACH is not only going to help us from an efficiency standpoint, but it helps us, really be able to know what our controls are. Compensation policy, this comes back to, that changes in pay rates. What sort of things do we require as far as documentation and approval goes to increase someone's payroll? We absolutely should have a record retention policy and follow it to make sure that we are storing this information for as long as we have to. And the last thing on policy that I'll mention is, security. And this likely isn't, a separate payroll security policy, but there's a lot of incredibly sensitive data when it comes to payroll. So we absolutely should have documented policies on who does and does not have access. What do they have access to and what don't they have access to? Rule of thumb when it comes to access is the least access that someone can have to still be able to do their job. So really having that documented as part of a policy is a great way to help implement that control.
Hey, Bethany. There was another question that came in for receipts. Most can take a picture of the screen, or if it didn't print, like a car wash receipt, it might not be offered, but you can take a picture. Is that valid in your opinion?
Yeah, absolutely. Here's the thing. I'm always going to say like I would like a receipt, but absolutely sometimes it just doesn't happen. So yes, if the person can, grab a quick snap of the transaction on the terminal, that's a good option B, let's say.
Thanks, Bethany.
Okay, we're going to talk a little bit about risk assessments because what I'm hoping is that everyone is going to be so excited after this presentation that they're going to be like, we need to go and look at our internal controls. And one of the best ways to do that is a risk assessment. Lots of different ways that you can do it. This is actually something that I do with organizations. We come out, we do some brainstorming, we talk through what processes are in place now. But this is something that you can, kind of at least start the process on your own. So when we're doing risk assessments, we want to focus on prevention. I don't want to have the detection conversations with Bethany. Those didn't sound fun. I want to have the prevention conversations. So that's where we're focused on. We're focusing on separation of duties. Um, who is doing, who is approving? How can we separate those? We want to focus on what we can control. So we can't control, let's say, our vendors' internal controls, right? I can't tell them, well, you must implement these things because Bethany told me about this cool system you can use. We can't do that. We could suggest it, but we can't make them. So then we have to look at what can I do internally so that even if my vendor's email gets hacked and they email me and say, change the information, what controls could I put in place so that I don't fall victim to that? And focus on what can we monitor? Where are we going to see a financial impact on something? So we want to make sure that our risk assessment is really focused on areas that we can continually monitor because internal controls are great, but they're only as good as us actually implementing them and actually using them to monitor activity. So when I'm going through a risk assessment, these are some of the things that I'm going to ask myself. Who has access? So who has access to certain things? If something went wrong, who might be involved? What could go missing? What could be misappropriated? So if it's, cash receipts, well, cash can be pretty easily misappropriated. If we're looking at our payroll process, well, then I know that someone could maybe increase their pay rates and shoot, would I know if they did? So what could be misappropriated? When are things going to be most vulnerable? There are peaks and valleys typically when it comes to different processes. So honestly, we're coming up on a pretty peak time for payroll, right? We might have some year-end bonuses, we might have some pay raises coming up. It's a busy time in payroll. So that's when things are going to be most vulnerable. If our organization is very seasonal, we have a lot of cash transactions at a particular time. Well, guess what? Cash receipts is going to be pretty vulnerable during that time. And then where are we going to see the financial impact? That comes back to monitoring, right? So I have all these controls in place and that's great, but I know I got to double check stuff. So where am I going to see in my finances if something went wrong? Am I going to see it on my income statement? Am I going to see it in my balance sheet? Am I going to see it in some lingering outstanding items on a bank reconciliation? Where am I going to see that financial impact? So I do want to talk briefly about the impact of technology. So when it comes to internal controls, now you'll notice there is more on the good than there is on the bad. So don't be afraid of technology when it comes to internal controls. It's created some new fraud opportunities, right? That vendor emailing us to change the information. That's a fraud opportunity that, 30 years ago didn't really exist. Um, so it has created some new fraud opportunities. AI has made it incredibly easy to falsify receipts. I could go in and with the right program, ask it to create a Home Depot receipt that looks incredibly legitimate. I won't, it's unethical. But I could, right? So there are some new fraud opportunities that have come about from technology that we have to be aware of and we have to be vigilant. But the impact of technology has a lot more good. It enhances our efficiency, right? So rather than me have to sort through 200 paper receipts, I could have people upload them and I can look at them right next to the credit card transaction. I can have, invoices be coded by a system and then I can review it and make sure that that makes sense. That's the kind of thing that those AP automation systems can help us with. So we absolutely have enhanced efficiency with technology. It can also be much more difficult to circumvent controls. So we talked a little bit earlier about, setting up with ACHs or wires with our bank. If I'm writing a check, then I can pretty easily just, send it out before something has been approved. If signatures are programmed into the system and they print, or there's a signature stamp, or I'm willing to forge a signature, it's pretty easy. But if my bank requires me that one person has to enter the ACH transaction and another person has to approve it, it's a lot harder to circumvent those controls. It also gives us some greater control opportunities. We have audit trails that we can look at and see, hey, who might have messed with some things? we can set up some of those restrictions. We can set up workflows that says, hey, if it's $20, I need a supervisor to approve it. But if it's 20,000, I need the department head or the CFO, depending on our risk appetite. I need them to approve it. And within those systems, I can restrict it. So the payment literally cannot happen until that approval happens. So don't be afraid of technology. We want to use it well, we want to use it wisely, but it absolutely is a great way for us to enhance our internal controls. All right, I'm going to do top 10 tips, and then I see a couple more things have popped into the chat. So we've got about 5 minutes, and I know I'm right before lunch, so I want to make sure I keep to time. So this is kind of like, regardless of your organization, here are like 10 things that I want you to walk away with and say, do I have this? Okay, I don't have this. I need this. Have a fraud policy. And a lot of times I get I'm sorry, you want me to have a policy that says don't commit fraud? And I do. I do want you to have that. Because it's more than just that, right? Again, it's creating that tone at the top. It's creating an environment where we're telling everybody at our organization, hey, guess what? We don't tolerate fraud here. These are some of the things we consider to be fraud. It's never exhaustive. Fraudsters are pretty creative, but it's a great start. We can also include in there whistleblower provisions, because the most effective way that fraud is found, again, coming back to that ACFE report to the nations, the most effective way is through tip. It's not through external audit. It's not through, some vendor saying something. It is through our employees saying, hey, something doesn't look right. So if we give them an avenue to report things like that, we tell them how to report it. We tell them who to report it to. We tell them who to report it to if the first person they're supposed to report to is the person they're worried about. We have then created a great fraud policy, including whistleblower provisions, that is really going to help our employees, our best line of defense, know what their steps are. We should have a conflict of interest policy. We talked about this a little bit earlier. It's going to vary by organization, but we absolutely should have something in writing, a conflict of interest policy, and make sure that we're reviewing it so that people understand what their requirements are. Have a vendor onboarding process. Periodically do vendor audits. This is something we do with data analytics tools, but it's going through your vendors and, where are their duplications? Where are their addresses that maybe match employee addresses? This is a great way to kind of do some of that vendor monitoring. Improve your credit card monitoring use and policy. Credit cards are easy, right? And I get that from an efficiency standpoint. But they can do a lot of good, but they can do a lot of ill. So we want to make sure we have a great policy. We have to make sure that we are in that policy defining what is appropriate use of the credit card. What are the requirements if you are, if you were going to have one, what are the documentation requirements? And I always come back to, just because someone has a credit card doesn't mean they are extra trustworthy or they've reached a certain level at an organization. A credit card should really only be if someone truly, truly needs it. Sorry, we have a minute left. So we want to review and analyze budgets and financial statements. Again, we come back to that risk assessment side of things, that if there is something going on, we want to know where we're going to see it in our financial statements. Use your accounting software. Always, always, always use your accounting software. Use the workflows that are in there. Use the restrictions that are in there. We're paying for it. Make it work for you. And if you aren't sure, are there things that I'm missing? That's a great opportunity to work with a software vendor, work with our team to kind of make sure you're utilizing all aspects of it. We got to have disbursement documentation. We got to have a bank reconciliation process. We have to separate the preparation and review and approval process, right? We got to have that great separation of duties. And the last thing I want to make sure that every organization has is a procedure manual. This doesn't have to be standard operating procedures where you have 7 million screenshots, right? You can. But the procedure manual is one of the best ways that we can really implement and monitor internal controls, because then we are sharing with everyone, this is how this process happens, so that everyone knows, hey, I have to provide this information, or this person has to approve it, and can ask those questions and say, hey, I thought our procedure was that you had to approve this. It doesn't look like that was happening. So a procedure manual, it is a vital tool when it comes to not only efficiency, but really internal controls, because it's the best and most effective way for us to communicate with everyone. This is what our processes are. So this is kind of just like a quick 60-second, here are like my top 10. So take this back to your organization, kind of go through, do I have this? Oh, shoot, I don't have this. And reach out if you have questions. So with that, any additional questions that popped in, Cheyenne?
There was one about a conflict of interest for vendors. Can you give a few examples, maybe amount thresholds?
Yeah, so that again kind of comes back to risk appetite. And I always say this with conflict of interest too. I think it's difficult to set a dollar threshold because, especially in some of our smaller communities, sometimes it's impossible to avoid conflicts of interest, right? Like everyone at the organization knows everyone in the surrounding area that we might work with. So within our conflict of interest policy, what I always like to recommend is make sure that we're delineating how you need to report it. Because just because you're related to someone at an organization doesn't mean that we can't work with them. It might mean that you need to excuse yourself from that vote. It might mean that we need to look at some additional documentation, set up some appropriate controls in place. But it doesn't inherently mean that we can't necessarily work with that vendor. The biggest issue is when things aren't disclosed, and then we find out later. So I wouldn't say that there is a specific like dollar thresholds that I would necessarily recommend for organizations. It's really more defining what is a conflict of interest, how do I disclose that, when should I disclose it, and what are some things that if we want to potentially work with a vendor, what protections are we going to put in place so that there isn't a concern about conflict of interest?
Awesome. All right, well, we are just a few minutes over, so we'll go ahead and wrap it up. Thank you so much, Bethany. And thank you all for joining us today. We will be emailing out a recording of this presentation with the slides to everyone that attended. Bethany's contact information will also be in the email. If you have any additional questions, please feel free to reach out to her. And that is all we've got. So have a great rest of your day, everyone.
Thank you for joining us.